Welcome to my channel, God, Man, and Money series. Or you can look for me with Abbas Adekola YouTube or Abbas Adekola on YouTube. I invite you to subscribe to my channel, and I appreciate your support and your encouragement, and I welcome your criticisms as well. In this series, I want to talk about something very, very, very important and very, very crucial. It's just happening now. Bank failures, and what the religious investors need to know. There's a lot to unpack. What a few concepts, such as the concept of bonds. What's a bond? The concept of bank stocks, the concept of bank run, the concept of FDIC, and a whole lot of issues like that. But I'm going to limit it to what I consider to be more relevant for us. The history of bank failures, the most recent occurrence of it that was so widespread was in 2007 and 8, where phrases like "too big to fail" entered into our lexicon, and where bailout also entered in financial, as a financial terminology, entered into our lexicon, and so on, and the scare that comes with when a bank fails. Like I just said now, there's a lot to unpack. I will limit it to first, let's talk about something that is key for the financial market, and that's the concept of bonds. What's a bond? A bond is issued by borrowers to the lenders as a kind of a promissory note. You give us your money and let us do whatever we like or want to do with it. You will receive a percent of that money, maybe annually or twice a year. And when the bond, and that's a bond, and there's a maturity time, the shortest possible time, or the shortest time that are available in both in practice and in the literature is 2 years, 4-year term, and these are called short-term bonds. And then you have a longer time ranging from 10 to 20 to 30. So over this period of time, you will receive what is called the yield. What is called yield? It is interest. And when the bond matures, you receive your full amount of money that you loaned that company. I have said I have had to deal with this, understanding this right at the beginning of this journey. And at that time, I was issuing these productions only, what you call it, not by video. It was just like oral, like recorded messages or so. And I've declared that the religious investors would have nothing to do with investing in bonds, because bonds actually provide a classic example of what riba or usury is about. I'm not going to go back to some of the details about that, but I can categorically state that bond represents a typical example of for the kind of investment approach to investment that is discouraged by the teachings of many of the Abrahamic religions, especially Islam. So that's why you will now hear me talking about bonds But bonds is there in the market as one of the major financial institutions or financial strategies or means of investing. The other thing that we need to talk about is about banks themselves. How do they incur losses and fail? And like I always emphasize, I'm not a finance expert or scholar. My interest in all of this is because I need this knowledge, need this education to understand the stock market and to understand what I can get involved with and what I cannot, or what I can recommend or cannot. So banks themselves, they rely on bonds. They rely heavily on bonds. And banks themselves, they are of different categories. And so those banks that have just failed recently, that we are in the news now, like the Silicon Valley Bank, like Signature, like all of these, about including Credit Suisse and all of these things. If you're not following the development carefully, the cause of this failure was different from the cause of the failures of those banks in the 2007 and 8. Because in the 2008, or the Lehman and all of these things, it was involving, it involved so much risky, too much leverage, and too much outright distortion of in transactions. But this one came again from another reason. This one, in the majority, they came because when banks hold your deposit, they invest it in something else. And Silvergate or Silicon Valley Bank invested much of the deposit that it was holding, the money that it was holding for his customers, invested it in long-term bonds. And long-term bonds, who issued these bonds? The Federal Reserve, i.e. our government. And these are the bonds that pay higher yield. However, because of what's going on now, there something has happened that is called inversion of the curve. Inversion of the curve happens when short-term bonds pay higher yields than longer-term bonds. And also something else has happened, rising interest rates. Interest rates, according to our experts, has been raised over 1,500% in the last 1 year. You know what's going on, what Chairman Jerome Powell is doing. I spoke about Jerome Powell sometime in one of my videos as the taskmaster and the one that disciplines the market. We're all afraid of him. Okay, I'm not going to get into that too much. So when all of this happen, inversion of the curve, rising interest rates, and all of these things, those longer term bonds are in trouble. And the banks and the investors, those investment banks, are also in trouble. So then what happened? Bank run. When customers begin to be aware that the bank is in distress, they need to get their money out fast. And so Silicon Valley Bank in particular had to sell the bonds, the long-term bonds, at a loss, to the tune of about 20 billion or more. So that, in fact, is the reason why, the major reason why this is happening now. But what is the unique perspective that I want to give you about this? Because I'm not just here to regurgitate, even though it's important, everything that the experts are saying and my learning about it, I need to put a special perspective. I need to give my special perspective of it. So what I'm going to say, first of all, is that what we call the bailout now, coming from the government, well, I don't see it necessarily as a bailout. I see it from the perspective of the interconnection of the financial instruments. So I'm going to tell you that our government, the activities and the operations of the federal government of the United States of America is run similarly like a business, and it's our federal government that issues bonds and sell bonds. So if the banks crash as a result of bonds where their expectations have become not unmet, it's going to affect the bigger brother too, who is issuing and selling these bonds. So I see the action of the government as a indirect way to say that, well, we are all in it together, and whatever affects our customers may come back to hurt us ourselves. That's one thing that everybody is missing when they are either criticizing the government or welcoming the action, and so on and so forth. The other thing is that we also need to know that those banks, the reason why people invest and put their money in those banks is because these are not like the typical major banks. There's what is called the regional banks. And among these regional banks, from my own previous studies, the BDC, if you are an investor and you want to make money and you want to guarantee the safety that you don't lose money, these are where people are putting their money. But for us religious investors, we don't consider that to be a good place to put our money. And some of these BDCs, they pay yields, which is interest, up to like 5, 6, 7, 8, 9, 10, 11, 12%. So what I'm trying to tell you here is that those are investors who have no religious concerns. They consider this a safe way to invest, safe way and quick way, easy way to protect your money against inflationary trends, and also to receive yield from your money. Religious investors, we don't see it that way. And so one key element that I want to emphasize here is that investing in stocks is more dangerous, more risky than bonds. And that perhaps might be why it is legitimate and permissible in Islam. So there's a lot to unpack about that. Another point that I would like to add to this is that banks like the New York Regional Bank or whatever you call them, about 3 or 4 of them, they just collapsed like a pack of cards, one after another. They are also specialized banks. Specialized banks in the sense that they constitute a major risk even for us religious investors. Because as religious investors, we want to invest in maybe technology companies rather than in banks and in bonds and in all kind of things that we know for sure that this is not what we want to get into. So, but what happens is that these are the banks that are funding and providing loans or credit lines of credit to the technology companies. And the majority of them rush to those banks. But these banks also, set a trap for them, if I could say, by having them deposit, if not all of the assets or the majority of assets with them. And so the question of what deposit or what assets or what customers' money is covered and what is not covered and to what extent becomes a major issue, because the FDIC, the federal agency that is providing insurance for depositors with banks, only limits the amount that can be insured to $250,000. If you open up any account and you read the tiny print you will see that. But we don't care about that because many of us don't even probably aspire to have that much or don't think that way. So, but the companies, the startup companies, that's not a lot. That's nothing for them. And so companies, startups like Roku, like maybe a lot of them that we don't even know, that may look attractive for us, that this is a company in new energy and so on and so forth. They don't get loans from Citigroup or from Goldman Sachs or from JP Morgan. These regional banks are the banks that provide money for them or loans to them. And now what happens means that startups and yet to become profitable companies, they're going to suffer a lot, regardless of whether there's a bailout or no bailout, and not much bailout can actually. And also what we are hearing now is that Secretary Yellen and people in charge, they're trying to take on this challenge and trying to calm the market and calm the people, because at the time of a recession or recessionary trend, this is something very, very serious, but it may not have much impact on the average people, average depositors. And many of the majority of the depositors don't really deposit with this type of banks. So however you look at it, there's good and bad, there is ugly and beautiful, whatever. So I don't know. Religious investors need to be aware of this, and they need to be aware of the fact that we have a little bit of reservation. We have a serious reservation about investing in banks, investing in bonds. Investing in stocks carry similar risks or even much bigger risks. But that's what's open to us. That's where we find legitimacy to be involved in the stock market. This matter is not as simple as I've tried to present it, but it kind of hits at the core of the issue, and it kind of alerts us to what religious investors need to know about. Thank you very much. May God bless you. Bye-bye.